Well, hello everyone, and welcome back to the Man and Machine here, episode 121. Happy Monday to Ben and Mark. Fellas, how we doing?
Doing good. Coming off of Easter weekend and getting back into the swing of things. Market was closed Friday, so looking forward to a full week.
Yeah, need it. Mark, what's going on, man? How are you?
Yeah, happy Easter Monday. Nice long weekend, refreshed, ready for a full 5-day week here.
Yeah. Okay. Well, since you guys are so ready, I'm ready too. I'm ready for it.
Better be ready.
Full week of trading. It was nice to have a Friday with not the full stress of a trading Friday. Not to act like we didn't have that stress on Thursday. But a lot to cover today. I'm curious to know if anybody had any Coca-Cola over the weekend, and we'll get into that, as that is the stock in real life that we'll be covering today. And then we're going to learn a little something. We're going to talk about automation and options and the benefits and the limitations of everything there. But Ben, I think since we were not live on Friday, maybe we give a quick PeakBot Picks update. For those of you who are not familiar, PeakBot Picks is a trading contest that myself, Ben, and Thomas, our colleague for our Friday show, we compete against each other, 3 picks a week that we all take in our automated trading platforms or in our automated trading accounts with PeakBot, and we track them for you. So let's take a closer look. Ben, me or you? Who wants to go?
Let's just rapid fire. I'll just share my screen. I'll just show the tracker document that we've got here. And I will also mention that I'll be making this week's picks today because the trend spread bot did not open a new position on Thursdays intentionally, right? We didn't want to hold over the long weekend. So trend spread will be opening positions today. Therefore, I'll be making my picks today. But looking at last week, I went 3 for 3 with XLF, Lily, SQQQ. Bearish on all those plays on the week. Did take profit on all of them a day before expiration. It looks like I made about $117 while putting up about $600. That's almost a 20% ROI on the week. Pumped about that. 3 for 3 for me. Dillon, how'd you do?
Awesome, man. Well done. You can actually just pull my screen up right there, Ben. Also went 3 for 3. However, I think you're going to take the cake. I didn't collect as much premium. All right. So I had 2 call spreads and a put spread on ASTS. So that's AST Space. Yeah, it's Space Tech Company. Pepsi, funny enough, bearish on Pepsi coming into a Coca-Cola conversation today. And I was bullish on Kroger. So I made, I think it was about 11% on the week. So I collected $44 out of 59 that was total available in premium, dished out 600 in cash to do so. So good week. And Thomas, I bet he's updating his document right now, but I think he went 2 for 3. Don't quote me on that. But either way, Ben, I think you're the winner this week.
Big winner, big winner.
So we'll be making those picks today. If you want to catch up on those, join us Friday at noon on our live show.
And I believe we'll be posting videos of us making those picks today.
Yes. Okay. So let's get into it. First of all, did anybody overdo it on Easter with food? Mark, I typically love to hear more about your holiday food menu. Did you have anything that you were cooking special for Easter or no?
For my family gathering, I was in charge of the lamb and the wine. And so the lamb, I did a 24-hour sous vide at 131 and then roasted it at the end in the oven for about 20 minutes. Came out perfectly. Nice and tender, medium rare to light rare in parts. It was delicious.
Man, what's a good wine pairing with that?
So champagne, of course, to start.
Okay.
But with the lamb and, I think it's an appropriate Easter wine to drink Chateauneuf du Pape. which is from the new home of the Pope, is what that means in French.
Okay.
In the mid 1300s, the Pope moved to Avignon for about 100 years and had a number of vineyards in the south of France. And so that's where Chateauneuf du Pape wine comes from. It's embossed with the papal seal on the bottle. So I figured that was the perfect, not only from a flavor profile, but from a aesthetics perspective, that's a good Easter pairing.
Very well aligned. I would have to agree with you on that. Wow. I have to tell you, I can't wait to sit down and have a glass of wine with you again here in the near future, and just be taking a school about all this. We should be talking more wine stocks. If there are, I don't know how many wine stocks there are out there. Truthfully, do you know, Mark?
Not that many. I mean, Diego is publicly listed. They own a massive portfolio of, some of the big names, but, most of the good wine, like the really top tier stuff, is all privately held.
Right.
Makes
Naturally.
sense.
Okay.
Although LVMH does own a number of them. They're not listed in the US, but LVMH in France does own a number of premium chateau.
Okay. Good to know. Good to know. Well, what we're going to be talking about today, maybe not as delicious as some of your Easter wines. That can be argued, though. We are talking about Coca-Cola. I think Ben will get it pulled up here right now. Ben, is that the official slogan? Is that what we're going with?
Taste the feeling, Coca-Cola. Yeah, that's at least what Google came up with.
Okay. Awesome.
But there it is. I don't know about you guys, but the fact that the ticker is KO instead of cola, bothers me. Big miss. Big miss.
I agree.
I don't know the history behind that. Why they went with the KO?
Let's see. Why KO?
Let's learn live.
For Coca-Cola.
Is the cola ticker taken otherwise?
Well, here's from the Coca-Cola Company.
It is.
I'm going to share my screen here for a second. We're just, we're surfing the web here. We don't know what we're going to find, but this is on Coca-Cola's website. Oh, I got to get yours down here for a second. All right. What is the Coca-Cola Company's ticker symbol, and where does? Okay, no, I don't. No. By the way, when you Google it, first two things that pop up are Reddit, Quora. Okay, wait a minute. Let's get down to it here. Where's KO? This isn't going well.
Look at Reddit.
All right, let's go into Reddit. Let's see.
The flavor was derived from the cola nut, spelled with A. Okay. I don't know if I buy that.
I don't know if I buy that either, but my search is not going well. The search that did go well, which I ask you guys every time, and we'll get into our experiences with Coke as well as the stock, which I've traded a good amount. Any guesses on IPO? This is a fun one.
60s. Yeah, late 50s maybe.
I know. Didn't Warren Buffett buy this when he was in his 20s or something like that? 50s. I'm going to go 50s.
Yeah, so this is just based on the AI overview of a Google search, which has been accurate, I've found in the past. Okay, you guys are way off. I'll confirm this, but I'm getting a date of September 5th, 1919.
Wow.
Yeah.
Really?
All right.
Did they even call them IPOs then?
I don't know. It says Coca-Cola went public on September 5th, 1919. IPO was $40 per share. 600,000 shares of stock were issued to the public. Again, you guys can certainly verify this, but that's what I'm seeing here.
Yeah, I see it on Google too. It looks like the chart goes back to 1962 though.
Okay.
I've got this up on TradingView here. 1962.
I was looking at, I'm just going to pull this up quickly, Ben. This is IG.com, early years of Coke. Group of businessmen led by Ernst Woodruff purchased Coca-Cola from Candler for $25 million. Later that year, Coca-Cola made its IPO on the New York Stock Exchange for $40 a share. Okay, during the Great Depression. Interesting. Okay. So let's look at this chart here, and then truthfully,
real quick. Do you know when Coca-Cola first became available?
Like as a beverage?
Further. Yeah.
I'm gonna go with
1870s.
Yeah, I'm gonna go just a little earlier. I'm gonna go like 1861.
No one launches a beverage in the middle of Civil War.
I don't know my war dates, Mark. Come
1886. 1886.
Okay.
Dr. John Pemberton perfected the syrup to Jacob's Pharmacy in downtown Atlanta.
Oh, little hot Atlanta? Okay, I didn't know that. I didn't know it was Atlanta.
Still Atlanta-based, I think, right?
Okay. All right. Yeah. Let's see. I'm sure you're right. All right. Let's just ask. Let's get this out of the way. Are we Coke drinkers?
I'm not a soda drinker in general.
Yeah, I have it on occasion, and I'll share more about the occasion. Mark, are you a Coke or a Diet Coke?
I'm not much of a soda drinker. To the extent, maybe a Diet Coke's fine. I think real Coke has too much sugar to it. And we can get into the whole Mexican Coke debate with the natural sugar and whatnot. But American, my option, I'm going with the Diet, actually.
Totally agree. I think normal Coke is just so sweet. I don't know how anybody drinks it, truthfully. Maybe that's a hot take. I love a good Diet Coke on occasion. If I'm going to a movie theater or like one of the places that has the machines where you can get any flavor you can imagine, I'm getting a cherry vanilla Diet Coke. Cherry vanilla Diet Coke. Unbelievable. I'll enjoy that more than anything else I'm going to overpay for at the movies. But anyway, okay. So also my dad is completely addicted to the Diet Coke and will probably be the thing that kills him whenever he does go. He has one for every single meal, which is quite wild.
Even
but anyway,
breakfast?
I'm sure Wayne's drinking a Coke right now. I might FaceTime and get him on the show if we start. Anyway,
I think if you're a Diet Coke drinker, you're drinking Diet Cokes pretty early in the morning.
Yeah, and it is a bit culty, truthfully. The Diet Coke gang is a culty one. I do have flavor half regular. The flavors are too much. Oh, okay.
Going half and half here.
My dad does do that, but it's not half and half. He'll put a splash of Coke on top of his Diet Coke. I think that's too much.
Regular Coke?
Splash of regular Coke on top of his Diet Coke just for a little more. Like that's crazy.
What's
the ratio there? I think that's what Doug is saying, isn't it? I think that's what Doug's getting at here.
I think well, he's doing that with flavors because the flavor is too strong on its own.
Okay. Oh, Doug.
Doug, don't worry. We'll get to your Netflix question.
Oh, okay. We were just so hung up on now knowing that you do a lot of corporate work for Coke. We'll have to talk more about that. Okay, let's talk about the stock. I'm going to pull it up now. This is, I think famously, I associate this stock with Warren Buffett, right? Like the trade what you know, trade what you consume. I feel like, I don't even know if he's truthfully, I'm sure he's still in Coke, but I don't know that for sure. Mark, tell me, does Coke come into the portfolios ever? Has it ever? What's your experience?
I've tried trading this a little bit as kind of like a low vol alternative, right? Like in most times it's actually got lower implied vol than the S&P. So this is one of those sort of steady, I think we have a little bit of a counter cyclical nature to it too, right? Like even if we just look at how it's held up over the last 2 months, we can see why it's a little different than your average, call it now tech heavy S&P or NASDAQ. So that's sort of the dimension of the portfolio that I tend to use it for. I don't know exactly what their dividend is, but I think they do pay a little bit of a div too.
Mm-hmm. Yeah, looks like about 49 cents dividend quarterly. This last quarter was 51 cents. So they must have been.
It's like a 2.75% yield. That's, decent.
Yeah, not too bad, especially if you're a big fan of Coke and you're in it for the long run. I mean, if we look at this from at a 5-year scale, the 5-year isn't bad at all. Going from a low of $44, and you've got a pretty nice curve up. I mean, we've got a couple of dips along the way as expected. but now we're near all-time highs again at 73. Right, pre-market it's at 73.37. So almost doubled your money over the course of 5 years here. So that's not too bad, while collecting dividends along the way.
Yeah. I was just looking at this.
Doug says it's the Arnold Palmer of Coke, half and half.
That is funny. I actually, not last week, but the week prior, had Coca-Cola on PeakBot picks. I was bullish on it, tried to stay above $70, and it did. I made $53 on it on a contract expiring on the 11th. Overall on Coke, I just pulled it up in my Tradier account. I've traded what looks to be 5 or 6 contracts on it. I'm down about $100 on Coke. I have nothing but put spreads on it. So I've been nothing but bullish on Coca-Cola, and looks like net again, I'm down about $100. Have won about half my trades trading it. So Ben, does Coke ever sneak into your trend spread or anything like that?
I don't think so. No. Haven't traded Coke here.
It does show up for me quite often. I don't know how many other people on PeakBot are trading it, but it does come up. So, all right. What else do we need to know? I'm curious. What's the analyst ratings on this, Ben? I'm sure we're bullish.
So analysts, looks like
wow, that's more downside than I'm used to seeing.
Yeah, a little bit more. There's 23 analysts offering a 1-year price forecast on Coke. Looks like the average, though, is positive at about a 5% gain, which, again, not terrible, right? If you're looking for a lower vol stock, this is in that wheelhouse. And then analyst ratings are rating Coca-Cola mainly a strong buy, a couple buy signals, a couple hold, and then only one sell signal. So that's interesting to note that there's based on the 1-year price forecasts and the analyst rating, analysts are ranking this a buy to a strong buy, but then the price targets just aren't really matching that. So interesting to know that. If we look at the technicals, we'll look at a week, strong buy on the week. We'll look at the month, strong buy on the month. And that's what we would normally look at for our weekly credit spreads. So, hey, maybe Coca-Cola is something that we want to get into today when we get into our new trend spread positions.
I'll be looking at it.
Yeah, I think you said it well, Ben, that this is a little bit different than some of the other names that, we've talked about. This isn't the same as trading a Microsoft. This is not the same as trading a Zoom. That this is going to be a low vol type component, right? The premiums you're going to be collecting, whether it's in trend spread or on a wheel even, this could make sense. They're just going to look a little different. And, they're going to be lower premiums. Historical vol is definitely on the lower side also, right? Teens implied vol, teens realized vol. The VRP spread here is relatively similar to other names, but it's, I guess to compare that to the other names in your portfolio, this is going to take up a different place. A good one and an interesting one, especially with this div stream, but a little different flavor here, pun intended.
Pun fully intended. They do. I just noticed this, Ben. You can even click on it. They have earnings coming up actually in 8 days on the 29th. So something to keep an eye on there. Probably going to be some heightened premium and also some heightened volatility, but we'll see how they come in. So curious to see how they've done on the last few. It looks like they've done well, met or exceeded expectations on their last 4 earnings reports. Hopefully they can keep that streak alive. But look, this is one of the OGs. I think we can consider Coke one of the OGs, if we will. And I hate that I use that phrase as much as I do, but how
many stocks are listed that have been listed longer than Coke?
Yeah,
we're talking a dozen or less, maybe.
Yeah,
it gotta be. It's okay. Good. I'm glad.
OG is the proper term here.
Yeah, it is the proper term. So, good.
I was gonna say, any last words on Coke? Because before we get into learning something, let's talk about that Netflix trade that Doug was mentioning.
Okay, let's. No other thoughts for me other than I'm going to be keeping an eye on it for trend spread this week.
Awesome. So, Doug's question: did any of us play Netflix earnings? I did not. I typically like to avoid earnings, and then it looks like Doug collected $3 for a $5 wide iron condor at the 25 delta. Honestly, those numbers are tempting.
What were the strikes? I'd love to
really,
know.
really tempting. Yeah, curious what the strikes were that you sold. But it looks like I might have been mapping out a condor. At some point here with these two strikes. It probably was either this week or this week, just based on where those strike prices are. But no, and it looks like we are pretty. I mean, it was pretty flat, and then pre-market. Your contract's probably expired, but pre-market we are up about $20. So I've got some movement pre-market.
Chooses by delta. Love the approach. Stick to the delta.
Netflix is one of those names. I'm probably permanently scarred from the era of when I was trading, because Netflix earnings were always all over the place. And I generally don't like earnings in the first place, but Netflix to me is the poster child of the scariest possible earnings. So I have a lot of respect for Doug for getting in there on that.
Yeah, you're not kidding. I think I was curious to see, is Netflix doing okay? Year to date, I wanted to know how I guess they're up a bit. Okay. Do you guys know of, and pardon me if I sound silly, do we expect, while we're talking about Netflix, do we expect a split at any time? I mean, stock's nearing $1,000, right? Not that means that it needs to split, but is that a thought when you guys think about Netflix here and how expensive it's getting?
I'd love to see stock splits more. It makes it so much easier to trade and to diversify, to start diversifying with a name like Netflix in your portfolio, right? You need a pretty significant hunk of cash for that to be a reasonable percentage allocation, just with that kind of handle. So I'd love to see them split. If they haven't yet, I don't know what's going to convince them to, though.
Yeah, I'd imagine it's definitely part of their conversation. They're probably talking about it. And actually, if we look at the chart here, the split conversation is probably fairly new. I say fairly new, but within the past couple of years, because back in 2022, they reached a low of, it looks like $170-ish bucks here, $165 here. And then since then, we're all the way at almost $1,000 now. So great call if you caught it back then. Let's see how it did during COVID.
Had to be good, right? Had to be good.
Had to be. Yeah. So where are we here? 2020. Okay. So right here, short crash, short-lived, only a few days, bounced right back up, and then just soared from there. I wonder what the catalyst for the drop from here was. Any idea?
Mark, anything ring a bell?
No, I don't follow the name very closely. I'm not sure what happened then.
Yeah, big fall there.
It just tumbled.
But it's made its way back.
Like that to COVID related reaction to.
Yeah. Just the fall off. So Ben, all-time highs were what? Is that just a few months ago, beginning of the year?
Yeah, it looks like all-time highs around 1060.
Damn.
So getting back up there.
By the way, here's his strikes. 1025 and 935 are the short strikes. I don't know how long the contract was. I guess.
Gotcha. All right, those were pretty wide.
Yeah.
That's roughly there. And what was it? 935.
1 day trade. Netflix tariff-free trade. It's true.
That's true.
Netflix is gonna be putting out documents about these tariffs and about what it did to the market. That's what they're gonna do. Nothing like a Netflix documentary. Let me just say, I know we've shifted here, but anything Netflix puts together, even if I have zero interest in the topic, Netflix reels me in somehow. They are unbelievable at what they do. Anyway, any other thoughts on Coke, Netflix, any other stocks we want to talk about before we get into learning a little something here?
Let's throw in Domino's and it's like a perfect Friday night.
Domino's.
That's right.
Domino's is not publicly traded, right? Or
oh yeah, no, pizza is crushing it over the last like 5 years.
Oh my God! Wait.
PZZA, I think is the ticker.
Okay, I'm getting a over the market or over the.
Oh, sorry, pizza is Papa John's.
Okay.
Domino's is DPZ.
DPZ. Okay, there it is. Oh wow! Trading at 466. Okay, I wasn't aware. Domino's. Mark, do you have a guilty pleasure in Domino's? I mean, obviously, I think we've learned that you have maybe a bit of an elevated taste over Domino's, but do you ever crash and burn and end at Domino's?
No.
Okay. I just wanted to know. If they've ever been a low moment with Domino's. I've had them.
It's been 20 years since I had Domino's.
Yeah, good. Keeping a lot of the population alive, I have to say. We were just talking about this yesterday. I think it's Little Caesars does the hot and ready pies, $5 for a whole pie. I mean, that's keeping people alive and killing them at the same time. All right, let's get into it. Let's talk about, we got little options in automation today, I think. Appropriate.
Yeah. So Mark, you can talk us through and we'll obviously chime in, but automation in options trading, what are the benefits? What are the limitations? And Mark, how do you approach it?
Yeah, this is obviously a very relevant topic, and I think you guys have as much expertise as anyone in this. So, benefits of automation, I think, are the obvious ones, right? That faster execution. It allows for trades to be executed in milliseconds. It allows you to react immediately to things that are happening, particularly if you have some sort of system that is based on any sort of indicator. As soon as the machine can read that, then automatically, as the name implies, you can get in there and trade. Another kind of benefit of that is the consistency and kind of the rigor of maintaining a system. And I think that's particularly important for anyone that's trading under a system, and you kind of have to trade with some sort of set of rules. And the automation allows for a certain rigor to your strategy, that it overrides the second guessings that you might see, because in many ways controlling that emotional element to trading is one of the biggest implementation hurdles. So having that consistency, the ability to constantly monitor what's going on in the markets, you can read a signal whether you're out for a walk or whether you're just distracted looking at something else on your screens. So automation really helps with all of those execution components. The backtesting element is interesting here too, because it allows you to combine historical research with actual implementation, sort of along those lines of, overriding the system and getting too much or adding too much discretion in there. If you were going to backtest something and then automate exactly what you backtested, there are obviously some additional considerations with all of that. But it allows you to maintain the same thing that you studied and push that out going forward. Scalability here too is a great point, that with automation, you can quickly scale across different strategies and be covering a lot of different things that one single person can't manage. Whether that's allowing you to manage another trade type, manage multiple trading implementations, or just go do something else. The automation really allows for that kind of scalability and, having your hands in multiple different pots at any given time.
And
with
on that
trading, the algorithmic trading that will automatically execute based on, any of the various conditions, reading all these different points of light, you kind of, by definition, I'd say algorithmic trading strategies are automatic. Bots being one of those, specific pieces of software that, will automatically execute trades. whether it's, identifying via indicators or, following a strategy that's been back tested, specifically within options, they're particularly useful because there are so many different pieces that are moving at any given time. With stocks, there are obviously moving averages and you can layer them into option strategies, but volatility also has its own full suite of indicators. So having some sort of signal reader scanner that is capturing all these points of light is incredibly useful for derivatives with multiple dimensions.
Mm-hmm. Yep, and I want to say on that note too, you mentioned scalability in terms of many different strategies. That's something that I love to do. I love to implement a lot of different strategies at once. That way I'm diversifying what I have. But also another note to scalability, Mark, especially in what you're doing in managing people's accounts, because you are using bots and using tools to go in and make trades across multiple accounts, that does allow for you to have a broader reach and an expanded client base, because clients don't necessarily need to have as much assets under management coming in. They could come in with lower dollar amounts, and for you, it's you're setting up the bot, you're trusting the bot, you're letting it run, you'll do your check-ins, you'll do your normal routines, but maybe not as much time spent on your watch to get those trades set up and actually make those trades for people.
Yeah. Yep. Exactly. And I think it also allows for you to look at the market in different ways that you wouldn't be able to otherwise. So it's not only a sizing question, it allows you to push out things and let the bots do what the bots are good at, and the algorithms do what the algorithms can do, and let the machines work and let the man focus on what that specific expertise is.
Mm-hmm.
Yeah, I don't know. I try to think back prior to 5 years ago when we started this business, and I was trying to, get into the market and figure things out. And look, we know that the retail trader struggles because there's a lack of time. There's a lack of strategy, specifically in options when there's so many opportunities with all levels of risk out there. It's vital. This is how Wall Street and hedge funds have been trading for decades. We talk about that all the time. And this helps level the playing field. There are a lot of upsides, but the name of our show here is Man and Machine. You do have to have a level of responsibility when you are trading with these automated tools. Got to know what you're trading, got to know your strategies, got to know why you're selecting the stocks that you're trading, etc. And there are some limitations to it, which I can kick it back to Mark, or we can, I can continue.
Well, Doug brings up one of the limitations that we find, and actually, so it's for this reason. So the reason is bots, backtest, pricing depends on volume. Some underlying don't have the liquidity for bot trading or options trading. Totally right. That's why we put out a watch list, and we do that based on volume, based on liquidity. And we want those tighter spreads. Granted, there are a lot of names, so there will be some wider spreads that pop up. But if you stick to the more common names, you'll see tight spreads and you'll see that liquidity there. We've been toying with the idea of narrowing the watch list even further to get even more liquid there, but we'll see if we make any updates. But great point. But I don't want to steal a spotlight from Mark if you want to talk through the other limitations of automation.
No, I actually think Doug brings up an incredible point because it's not just true within, I think that's in general true about any options trading strategies, whether they're automated or not. Finding the names that have the right liquidity and the right, the volume profile and market depth and width to execute a strategy is really important. And I think there's a whole class of underlyings that are probably too illiquid, save for some very specific strategies. And then you probably even need to go further up the chain to find the ones that are appropriate for automation, because there is a sort of middle ground where as markets get a little bit wider, as strikes get a little bit thinner, with a million different strikes listed at any given time, there are just so many different quirks and dimensions. So I think liquidity is one of the real important kind of sorting factors for deciding what the names are for automation. When I look at my strategies over at Harvested, I track the top 250 most liquid names in the options universe, and that's a combination of volume, that's a combination of market width, it's a combination of open interest turnover, and it's in the names like that that you're going to see the most accurate pricing. That volume is what creates efficient markets, and buyer meeting seller. Tight spreads indicate that there's an ability to get in and out, that liquidity providers are confident in this pricing. And as a retail trader whose edge is different than the bid-ask spread, you want to go into a place where there is relatively tight liquidity, where there's fair pricing, where people are confident in these levels, because automation that's automatically just, ripping a price off the feed is going to immediately execute and isn't going to have that second guess or second review standpoint that a manual trade might have. So liquidity is very, very important. Sending orders into illiquid markets, can completely change the fill prices you're going to get, especially on some of these names where the difference between collecting a quarter versus 20 cents is pretty material to the strategy. So I think liquidity is one of the maybe not necessarily limitation, but important screener factors for where you want to automate it is very important. Some of that touches on the technical failures potential of automation, whether it's something that comes off the feed, it could be exchanges are down that are disseminating bad market data. The number of ways something can go wrong with a technical process or system is essentially unlimited. We have some other points on here about over optimization, and that's key. If you're following the strategy of back testing, coming up with sort of a strategy with a bunch of indicators, and then applying that, you always have to worry about in sample versus out of sample data, whether you're overfitting parameters, selecting a specific time frame that this strategy might have worked, looking or ignoring potential shifts in market dynamics. One of the biggest changes over the last 10 years has been the kind of slow decline of the volatility risk premium, and strategies that have a long backtest history that include 10 years ago, those strategies are going to be very different than what's happening today. So it's important when you're using that kind of backtest to implementation path to understand what microstructure and shifts in the underlying market have happened. Even looking at the macroeconomic backdrop, right? Like tariffs and this sort of trade war are not in the last 5 years of backtest, but here we are today, trading this market. So that kind of gets into the lack of flexibility that an automated system has. I think that's really two sides of the same coin, that the consistency that you get on one hand is also, you could describe that as a lack of flexibility. And sometimes your spidey sense and your, emotional brain overrides you in bad ways. But other times, you do need that sort of, person that's looking at the whole picture to say, this time truly is different. So that's a really tough balance in all of trading, but at least being aware of it when you're using automated tools is really important. And as with all trading strategies, right, market risk is still market risk. And at the end of the day, to trade and to make money and to take risk implies the possibility of loss. And automating a system is obviously not necessarily a guarantee that, putting capital to work is always a risky endeavor. So automation definitely doesn't obviate that, but it certainly can help improve a lot of the speed, the consistency, and general implementation considerations there. So a powerful tool, but as the show suggests, you need both man and machine.
I knew you were going to put a beautiful bow on it just like that. And if you weren't, I was ready to, but I had full confidence you were going to tie it back right there.
That's a pretty easy layup.
It was, yeah. We set yourself up pretty good there. So incredibly helpful session there. Look, that's what we've built our business on. That's what we've built our partnership on here with Mark and Harvested Financial, right? This is man and machine. And if you have given it your best shot and you still lack the time, the strategy, the discipline, or the overall interest in getting involved in automated options trading, but you want somebody to handle that for you, I'll get it back up on screen. You just want to head on over to peakbot.com/harvested for a professionally managed portfolio from Mark himself. So check that out. We got some great new strategies coming in to help manage those portfolios for Mark. So very exciting stuff there. Just want to make sure everybody knew where they can go to check that out for more information. So where do we go from here? Do we want to do economic events, Ben? We got to
look at the economic calendar. Yeah, and then let's get out of here. We've got market opening soon. So
all right.
Why don't we take a look at what's going on this week? Not much going on today. So if you were brave enough to hold condors, or really any positions over the long weekend, there's not much going on in terms of economic events today. I haven't taken a look at President Trump's calendar today, which could throw a wrench in things, but
changes everything.
We're going to have to start reviewing that as well. But looking into tomorrow, we've got some Fed speeches throughout the course of the day, some during market hours, some outside of market hours. Really nothing too major. On Wednesday, got some more Fed speeches, got S&P data, which for me, I'll think twice about condors, but I'll still trade them probably. 5-year note auction at the end of the day. These auctions give you insight into interest rates and where that world is moving, and that kind of gives you an idea of how the market might react, which is why for us, at least for our automations, we kind of try to avoid those note auctions, bond auctions of longer term as in like 10 plus years. And then Thursday, going into durable goods orders month over month, that's marked as high importance per trading view. We've got existing home sales. Neither of those are really telling me to turn off. And then we've got some Fed speeches after market closes. And then going into Friday, we have that Michigan Consumer Sentiment Report, which has blown out condors, blown out spreads over the past couple of months. So this is coming up this Friday. This is the final version. So the preliminary was already released. We had our effect there. We'll have to go back and take a look at how that went. But other than that, just some oil rig counts later in the afternoon. And then we are set to sail across the weekend. So not too much going on this week, in my opinion.
Okay. Excellent. That Michigan Consumer Report scares me ever after. I think that was the beginning of this year. The big one came out, and there was a million other things going on with the market at the same time. But I feel like that's where we put all the blame. Just roll a 20-sided dice to see what the White House news will be. That's a fair estimation there. So, Mark, any thoughts on the week ahead here, or business as usual? Anything that's getting you excited or scared?
Yeah, business as usual does have me a little bit scared. That I think we're still in this choppy volatility adjustment phase, right? I think there are some indicators in the vol space that are coming in. I think VIX futures, I haven't checked them exactly this morning, but through the end of last week, they were coming in softer. Some of the contango that we saw on that VIX curve was softening a little bit. And, that generally could imply that, markets are stabilizing, but we're still in the upper 20s of the VIX, if not over 30 after this morning's little downtick. So I think moves of 1.5-2% are going to continue to happen in the S&P here, and I think individual stocks could even be more significant. So I think it just speaks to being particularly choosy about your trades. And, if I'll highlight kind of what some of the King Condor has been doing recently, which is one of the bots that I've had out there, I particularly like having that in this market because it's very picky about when it's going to get in. And with those built-in indicators, I don't have to worry about, hey, we're dropping 70 points into the open. I know that's a day I don't want to sell condors. So I think that type of strategy or that type of filter is going to continue to be, primo for me as I look at trading opportunities in this week and, likely the coming weeks too.
Yep. And Mark mentioned King Condor, and King Condor is one of our new bots for our pro subscribers only, also being used with Harvested Financial. If you want to try out the King Condor, you can do that for free. Actually, what is this? This is a different banner. Where's our banner? This is our banner.
There
you can try
is.
it for free for 6 months. If you create a new Tradier account, deposit $5,000 in it, scan that QR code. Yeah, Dillon, get that. Get your head
I gotta
up
get
there
up here, man.
above that banner. Try it out for free. 6 months. You're going to get PeakBot Pro for free for 6 months, and you're going to get Tradier Pro commission-free options trading free for 6 months. Scan that QR code, create your Tradier account, and get trading today.
And if you don't know how to scan the QR code, first, get with it. Second, just go to peakbot.com/Tradier, TRADIER for the access. Commission-free trading alone with Tradier Pro is going to be saving you hundreds, if not thousands a month just in fees and options. And that's not an exaggeration, depending upon your account size. So check that out. And never been an easier way to get into automated trading. So, all right.
One more thing, because I was keeping an eye on my inbox, and SIBO just put out their weekly macro vol digest, highlighting something about this week that I think is particularly important for individual traders, is that currently their expected dispersion index, so that's the DSPX index, they released this last year. Quick refresher, dispersion. We should actually do a lesson on dispersion. But dispersion is the difference in volatility of index components versus the index overall. So if we look at the implied volatility of all 500 S&P components individually, how different is that from what the VIX is saying? VIX being the implied volatility index on the S&P 500 as a total. So when stocks are combined in an index, they obviously mute each other, but to the extent that they're going to be moving in different directions and having more variance relative to the index, that's what dispersion is. So I think what the SIBO highlights in their note here is between both macroeconomic considerations, as people are impacted differently by the trade war, as well as earnings, individual names are going to be moving a lot more. So I mentioned VIX of upper 20s, low 30s. That could be even more significant for your individual names. So definitely, if you're playing SPX, if you're playing the indices, there's its own considerations, but individual names are going to be even more choppy in this environment due to a couple factors. So important to keep in mind as you're picking and choosing your trades this week.
That's incredibly important, and it makes me think, when I'm going to go look at my trend spread trades today and get entered, I'm going to be a little bit more careful. Things can get a bit erratic here. Okay, very helpful. Don't ever hold back on this type of information. Excellent, guys. Well, is there anything else that we want to cover here before we get into the day? We got about 10 minutes till market opens here, and I think we're good.
I'm all set.
All right. Well, thank you so much, everybody, for joining. As always, the PeakBot team will be live again on Friday, just shy of noon Eastern, across all socials for the Automation Station. Take a closer peek at Ben, myself, and Thomas's PeakBot picks for the week, all used by PeakBot, set up on our trend spread watch list. So other than that, happy Monday. Hope everybody enjoyed the long weekend, and the diet starts today, everybody. Thank you so much, and we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.